Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, July 25, year 2021. This is Dale Woodson, editor of Woodson Wave Report. You can see our honor roll and top 10 awards over the years and our disclaimer there. I want to also show you guys our subscription services. We have an annual, a monthly, a new video on demand, and you can see the things we offer there. And there's a contest, guess the closing price of the S&P at the end of July. Well, we need to cut that off soon. We only got a couple more days left. YouTube discount, 10% off everything we offer, okay? So without further ado, I also want to remind you guys, or thank you guys, for subscribing to the channel. Remember to hit the reminder bell and the like button. We appreciate your patronage to the channel. Okay, let's get into, I want to knock that down because I can hear it in the background. There we go. Okay, let's knock that down. Okay, we're looking at the S&P. We're going to mention the Dow and the NASDAQ. Look at the Russell and Tesla today. We're going to look at price and time. Very exciting things going on in time. We'll also look at price. Let's get price here. As you know, we've been looking for 5 waves up from the March low. We could argue from the January low, but let's just keep it here. You can see, I can mark them here. We've got 5 waves up. Okay, here we go. 1, 2, 3. If we put this 4 here, we have 5 there. And you can see within that, let's make that a little bit larger wave if we can, larger degree. Let's go sub-micro. And then you can see this last one here. Bear with me. Let's get that. Come on, Dale. Let's get that 5-wave structure. There it is. Okay. And we have a 1 here. 2 didn't retrace more than 100%. 4 stays above the wave 1 high. And a 5 there. We'll make that smaller degree so they're not the same. There we go. We've got 1, 2, 3, 4, 5, as you can see, and then 5 within. And even this one you can see is a 1, 2, 3, 4, 5 within wave 3 extension. Just to illustrate that for you guys, I'll put that in. Here we've got a 1, 2, 3, 4, 5. And to not confuse, let's make that red. There we go. Okay, so we were looking for that 5 waves up from the March low. It appears we have it, okay, at least 2 degrees of trend. But the exciting thing is going on is right here where we had that expanded flat, and then we were looking for 5 waves up. I think I have that here, yeah, on the 10-minute chart, that expanded flat that was right after the Fibonacci turn date. We got that there, and then we were looking for 5 waves up. What's interesting from here is we got this big move down. Some people can't see this and some see it real easily, but you can see this is an A down, a B with a slightly higher high, and then a lower C, expanded flat. If you look from here, you've got an A down, a slightly higher high, and if we get a lower C, that'll be a larger expanded flat. It's a fractal of the smaller expanded flat, okay, A, B, C down, 5 waves up. So if this is repeating, we would expect an A down, which we have, a slightly higher B, which should be higher tomorrow. We'll get in that with our time sequence. And then a C down to lower lows, and then 5 waves up, which would say that this is not the end of that move. Okay, but we'll get into that later. But we're looking at what is going on now. I want to get into right into the time, because what's going here with the time is almost incredible. Okay, as long-time subscribers know, I started to do Fibonacci time spirals in 1999 to be exact, and the first one I did caught most, not all, but most of the turning point highs for 7 years into the year 2006. And I did those because I was always looking to catch. I did it from the highs because I was looking to catch the 55-day low. Most markets bottom 55 days later, not necessarily a crash, but at least a low. Okay, I started looking at Fibonacci sequence instead of from a high, from the low on March 4. And this thing has the slippage, I call it, where it misses, is virtually none. Okay, from the March low, the first Fibonacci date was 317, no slippage, direct hit. The next one was 325, no slippage, a direct hit. The next one was 47, that marked a low, just like 325, no slippage. The only slippage was the 55 days from the low, marked a 428 high, and the market gapped higher on the 29th and gave the gains away. So the opening tick, we could actually say it was a second or a minute, was the miss. Okay, and then it went to 6-1. There you go. And the next turn date is 7/26. I do want to mention that all of these turn date highs have met with at least 2 or 3 days of decline afterwards. The next turn date in the sequence is July 26th. That's tomorrow. As you can see here, we have another turn date of the 27th from the July 14th high, which is up here. I don't have that little map, if you will, or chart illustrated. And then we have a NASDAQ turn date 1 day later on the 27th. And again, because the NASDAQ made a bottom on March 5th. Okay, so if you do the math, and the math is absolute, there were 126,000 minutes from the March 4th low to the June 1st high. So far in this sequence, that's 1, 2, 3, 4 turn dates, and that's a 99 point, I think there's 5 or 6 nines in there, percent accuracy, because it missed by a minute. It would even be higher if I said for a second, because the market gapped higher on the 29th and then went down. If the market makes a high on the 26th and goes down, and again, the down might only be 2 or 3 days, just like these other ones were. It doesn't mean it's the end of the bull market. It could be, but if this pattern continues, we could at least expect to see 2 or 3 days down from the July 26 high. That would be 1 out of 205,000 minutes, which is an even more incredible accuracy rate, if you will. So this pattern, I've done a lot of time spirals. I've never seen anything that was as accurate as this. So far, it's got 1 minute of slippage, okay? So that's what we're looking at for time-wise. We expect 7/26 or no later than 7/27 to at least mark a short-term high to be followed by at least 2 or 3 days down. And as that goes, we'll see what it looks like, okay? Let's see here. I got into that expanded flat. The NASDAQ, like I just showed, it was off by a day. The Dow just made a new all-time high. By the way, I want to talk about that real quick as far as the all-time highs. The markets don't all have to top on the same day. It's nice if they do, and then they all bottom like 1987. But in 2000, the Dow topped on January 18th, the NASDAQ topped on March 10, and the S&P topped on March 24, and then they all went down. In 2007, the Dow topped on October 9, the NASDAQ October 31, and the S&P also on October 9. And in 2020, after that expanding triangle, the Dow topped on January 12th, the NASDAQ and the S&P on February 19th. So usually they don't. If they do all top at the same time, that's great, but that's not the norm. The norm is they top on different days. That being said, the Dow just topped on Friday, just like the other indexes. It made a smaller, higher high as far as I could tell. Okay, but the one that's different is the Russell. And I didn't just do this. It's just left over from the last time I analyzed the Russell. You can see that top was back in March. We've got an A down, a B up, and a C down so far to here. C gains equality with A at 2090. Our 1618 should be in there at 1928. So that's what we're looking at with the Russell. It looks like we got a 5 down, a 3 up, and a 5 down. It may have ended there. It's a nice double bottom if it does. Again, there's our targets for Fibonacci quality with wave C and a 1.618 and a 1. Okay, let's look at Tesla really quick. And I just want to stay, at least for the short term, on the short term. because we're looking at this this July 13th high of 693, and we're looking at this July 19th low of 621. Okay, we have 5 waves down there. All right, that could be the first wave down of the bigger C wave, or it may not be. It's nice that it came within between the 50% and the 618 retracement and appears to be tracing waves down. The bulls need to see a move above this 693 high. That would mean higher highs are on the way. Okay, it broke through because this could not be a second wave up. It cannot retrace more than 100% of this first wave down. Okay, that's what the bulls need to see. The bears need to see a break of this low down here on July 19th of 621. That would mean another 5 waves down. And let's get a target for that. We're going to stay short term. Let's see here. And there's 5 waves down. If that high holds, then we're looking at a target of 591 or 547 for this third or C wave down within the larger C wave. I just want to stay again on the short term. Okay, so that's about it for today. I want to again look at this chart. It's mathematical perfection. I can't change the math. The math is absolute, and we'll see what tomorrow brings. Okay, I would say allow for a high on 727, but if this Fibonacci sequence is going to maintain its integrity of nearly 100% accuracy, then the S&P will at least form a short-term top on Monday, July 26. Okay, thank you guys again. Until next time, take care, everyone.